Do you need an LLC to start? You need an LLC?
No, you do not. LLCs are so overrated, and that is because it is like
Check it out. Before we start, I want to invite you to my next workshop. I've been doing a few here and there, but I'm ready to invite you all to the next live workshop. So make sure y'all click the link down below, tshirtmastermind.com. This is where you can come and ask me all of those questions that you may have, and it's hard for me to respond to in a comment because you guys know I need to be responding to you just like this. All right, so if you guys have any questions, I'll see you guys at the workshop. And for those of y'all who don't know how to get started in this game yet, I'm going to show you guys how to get started. I'm going to show you guys how to find some winning designs. I might even show you guys some of the AI processes that I've been using for my print on demand shops. So make sure you go ahead and click the link. Check it out. This is someone who was in the last workshop. I got a lot of nuggets rich and amazing information at your workshop session. You really helped me change my frame of mind to take action and start believing in myself and take the future of my family and myself into my own hands. There's a lot of people who was in these workshops, but now we're about to do it big. Make sure you guys click the link. I'm gonna be live. I'll see you there. What up? What up? My name is Rich. Welcome back to another video. This one is going to be so special because it's the beginning of the year. This is information that you need. I brought the homie Tyrone on. Big shout out to Sam Bakes, T-shirt side hustle, because this is how we met. But Tyrone,
yeah, absolutely.
Go ahead and introduce yourself.
Man, well, first of all, Richmond, I'm honored to be here on your platform to speak to your people, man, because I appreciate and respect what you do, giving people real, true, genuine, non-sleazy game, bro. I appreciate that. It ain't too many people doing that. But Rich, like you said, my name is Tyrone Gregory. The self-employed tax guy, owner of the self-employed tax company. And for those who are in my community, I'm known as their favorite uncle cousin. We all family here, man. And my goal is to really help people, start up business, minority startup businesses, become successfully self-employed, man, by helping them navigate through the jungle of everything that's out there about business, bro. So yeah, let's go ahead and get to it.
Okay, there's already got the first question for you because I see the T-shirt, man. I see the T-shirt.
Represent. Please understand this statement right here. Don't do it.
Do you need an LLC to start? You need an LLC?
No, you do not. LLCs are so overrated, and that is because it is like a buzzword on the internet. Like if this is why like I created this here, man, because so many people feel that they need an LLC to get started, but yet at the same time, so many people like, man, I can't start because I don't have an LLC. And I'm like, that is the farthest from the truth. And that is why I'm so upset with the idea of the LLC. Listen, you do not need an LLC to start your business. I'm going to tell you what an LLC is. An LLC is a false hope. It's instant gratification, right? People think, oh, I have the LLC, I have a business. No, you don't. You got a piece of paper that says you have an LLC, right? And that's literally all it does. Like, I promise you, you do not need an LLC to start your business, man. It's crazy what people think they need to do to be out here starting businesses. Like, I'm an actual tax preparer, right? I'm at the desk with actual people. Like, I am seeing the bad side of ambition. You know what I'm saying? And it's like, yeah, I had a young brother in here the other day was like, man, yeah, I heard that I can get an LLC and take my my W-2 earnings and put that into a bank account and use that as my business earnings. And I'm like, had to woosah, take a deep breath. But it saddens me, right? Because like I said, I'm at the tax desk. I'm actually with the people, and I had to educate them. I said, let's look at your W-2. So I told them, look at it. I said, you see box 1 of your W-2, right? That's how much you made. That's your earnings. And he was like, yeah. And I say, you see boxes 2, 4, and 6? And he's like, yeah. I said, that's the taxes you paid on that money. I say, so you telling me you want to take this money, put it into a bank account, right? Get an LLC, put it into a bank account and treat that as income. So you already paid tax on it, as you can see. And so you want to put it into a business bank account so you can pay tax again?
Yeah.
And he was like, oh, they didn't say that. I said, I know they didn't say that. But they're not going to say that because it makes them look good that they know. So, oh, yeah, do this. Here's the game. I'm going to give you this play. And it's like, bro, we out here killing ourselves trying to form LLCs, bro. So I mean, I know I just went on a long tangent. I apologize, but
Nah, that was a
LLC
good one.
is like a hot button for me, man, because it's terrible. And I'm gonna tell
Yeah.
y'all now: do not form LLCs in Wyoming, Delaware, and or Nevada, because that's a myth. That's a lie. Video coming soon for that one, man, because they lying to folks on that one. So nah, not at all.
No, I like that. People get LLC so they can change their bio to CEO.
Yeah, it's like, what does that do for you? Like, if you really trying to start a business, the LLC should be the furthest thing you should be trying to do. You need to figure out a system to be able to get customers on a consistent basis, because that's really all you need to have a business. You need a product and or service and a customer who's willing to buy it. If you don't have those two, you ain't got no business.
Right.
That's bottom line.
When I first got into ecom, like it was 2013, I had an LLC, but it was like the business name that I chose didn't even work out. So then like I had to abandon that in 2014 when I started back up. I didn't even have an LLC. I was just like, forget it. I'll just use my social. Like it asks you for
There
your
it
social,
is.
so I just type it in, and they
Man.
still send you what is it called, like the 1099 or something?
Yeah, the 1099. Yeah,
Yeah, they still send it to you.
1099.
You can still do your taxes the same and all that. So yeah,
Absolutely.
I don't want people thinking they need an LLC to start when you just started today.
No, honestly, man. And that's why I appreciate watching your content. Like, you really out there helping the people really get it in, bro. Like, you tell them you don't need this to start the business, and you actually show them, like, yo, this is how you do it. You don't need all this extra stuff. You don't need all of these fancy stores, fancy equipment. Do this and you good. Now that's why, like, I'm glad to be here, because I rocks with people that give people genuine information to help them get started long term. You know what I'm saying? So yeah, for sure.
All right, so can I still write things off without an LLC?
Absolutely. Absolutely. And LLC, again, man, like I said, it's that instant gratification. People are hyping things up like, oh, if you have an LLC, you can write off more. That is a bold-faced lie. They are lying to you. Why? Because let's look at the laws, right? The IRS treats single-member LLCs, which is just one owner LLC. They treat them as disregarded entities, meaning that you're going to be, for at least for tax purposes, treated the same as a sole proprietor, meaning you're going to be under the same laws, rules, and regulations and compliance obligations as a sole proprietor. So you can write the same thing off as a sole proprietor as an LLC. It's not like, oh, if I get an LLC, that $100 gas receipt is all of a sudden going to give me a $200 worth of expense. It's still going to be worth $100 regardless. There's absolutely nothing different having an LLC as opposed to being a sole proprietor. The same exact, I mean, even, I hate it, but even the whole G-Wagon play, you don't need an LLC to do that. You can do that as a sole proprietor if it makes financial sense for you to do so. LLCs is really just hyping people up, getting them all excited for them to do nothing special.
All right, so all right, let's talk about the pros. And so what are the actual benefits of actually getting your business set up properly, getting an LLC or so on?
Well, you know what? There are pros to having an LLC. Don't get me wrong. I'm wearing this shirt because the negative side is being glamorized too much, right? So the proper side of having an LLC is what I call the long game. If you know for a fact you're trying to extend your business beyond the 5-year mark, which is where, statistically 80% of businesses don't go beyond 5 years. If you know for a fact you want to go towards that 5-year mark, then look for an LLC probably in year 2, right? In that case. Why? Because after year 2, you've established your client base, you've established your systems. Now we want to switch it over to an LLC because we want to start looking into expansion. And then now comes into play business credit, right? Like a lot of people saying, oh, if you want to get 250,000 in business credit, go get your LLC tax ID. And I'm like, but then if you listen to them at the end, they say, but you personally need to have a 680 credit score. Well, if it's going to be on me, what's the purpose of the LLC, right? So I'm telling people, like, yes, work on yourself first, then get the LLC, because what happens, especially for tax purposes, once you reach a certain income level, like for me, my threshold is 100,000 net profits. if you can say that, after you spent your expenses, what's left over is 100,000, by all means get an LLC, have it be taxed as an S corp, because at that point it's going to save you money in self-employment taxes. But if you're not at that mark yet, then it's going to cost you more than it's going to save you. Yeah, you can say, "Oh man, I saved 1,500 by switching to this LLC S corp setup," but it cost you 3,000 to do it. So you kind of went backwards. So it comes a point where when you're making money, obviously more money means more volume. More volume brings on more liability, because that's another thing. People say, "Oh, LLC is going to protect my assets." Not if it's not set up properly, which 99.9% of the LLCs aren't, because people just form them and go about their business. There's a lot of things you got to do. So the pros to an LLC is, one, when it makes financial sense, it can save you money. Another pro to an LLC is if it's set up properly, meaning that the business owner, or should I say the business, is no longer dependent on the owner financially, operationally, everything. If that's set up properly, then the LLC can have a little bit more weight in court and help in case of lawsuits. But don't, it's not 100%, right? Keyword being limited, not 100% absolved, right? So it does have its benefits, man, especially if you're the long game.
Right. Man, that's why I like you, man. You spill the truth. That's why we need to get you some more followers, because, we'll get into some more of the myths at the end. But I do like the fact that you're talking about the 250K, whatever, the credit or whatever. Anyways, most people who's going to aim after 250,000, don't even know what to do with $250 first anyways. Like, man, got sad.
Because you said the right thing right there, bro. Like, if you gonna get it, what you gonna do? Because it's not free money. You got to pay it back. And if you don't have a plan to pay it back, what you doing with it?
Exactly.
Yeah. And that's what a lot of people don't like. It tells you, you get an LLC and you go out and get this money. But the LLC is not the one that's obtaining the money. The individual is. So if the LLC defaults and they're like, "Oh, I'm gonna just file bankruptcy," that's fine. They still coming after you personally, because you personally guaranteed the loan.
Right.
And a lot of people getting caught up like that, like, "Oh man, well, they didn't say." And I'm like, I get that they didn't say, but at some point we should be able to put two and two together, right? You know what I'm saying? Like, let's just not depend 100% what they say. If you are personally guaranteeing it, that means you are personally liable, regardless of the LLC.
All right. Let me slow it down. All right. So how do I pay? Because I know there's like all kinds of like state tax remitting, like online, all kinds of stuff. Like, so how do people supposed to pay? Like, most of the people who watch this do e-commerce. So like a lot of sales come from online all over the place. How are they supposed to be doing taxes?
You know what? Sales tax, man, that's definitely one of the biggest taxes that affects the e-commerce industry, right? Especially since Wayfair versus South Dakota, all of these states now are going to impose state tax. The key thing here is to understand the economic nexus, right? Like, do you have enough presence economically in that state to trigger a sales tax? That's what's going to be the main thing for people in e-commerce business, is to focus on that. I know, like Shopify, Etsy, those stores like that, they have systems or at least apps that you can plug in that'll help you track which state is going to require you to pay. Do know that the state that you actually operating business in, you definitely should register with that particular jurisdiction to get that sales tax and remit sales tax to them, cover your butt where you sit at. But for all the other states, one, don't just go registering. Please, do not register for every single state just because. I know a lot of people like, I want to be safe. I want to be, precaution, do everything. Let me go register for every single state. Don't do that. It's going to be a nightmare for you. And if you try to hire somebody, man, the cleanup work costs. That's what I try to avoid. Like, the cleanup work cost money, because once you register with these states, they automatically assume you owe them money. They start sending you notices, demanding money, and you may not have even met the threshold to even pay them yet. So that's the first thing. Do not go register for every state. What I would do, there are free resources, man. I can't pronounce it. Alvara,
Yeah.
Alvara, right? They are an online sales tax application. Like they do everything sales tax. There, you can go to their website and you can click on resources, and it'll give you a map of all the states. And what you can do, right? You can write down or just bookmark that resource, and they tell you what the threshold is for each state, right? Like say for here in California, you either have to have 2,000 sales or $200,000 worth of transactions before you be obligated to submit sales tax to California. So if you are in Nevada and you made maybe 10 sales to California, you don't owe California nothing, right? So don't register, because the minute you do, California gonna be like, hey, where's my money?
Yeah.
So the best thing to do is to really understand the threshold for each state, that the whole economic nexus for each state. And once you understand that, keep track of it, you can look at your sales dashboard. It'll tell you, or it should tell you, what state your sales are coming from, and you will match that. So for example, if you say you're looking at your dashboard and you see a lot of income coming in from Virginia, so to speak, right? Then you go to Virginia, say that big amount is 10,000 came from Virginia, but you go to Virginia and say, oh, well, you need 20,000. Well, guess what? You cleared. You don't have to remit nothing. You know what I'm saying? So check that for each one and you'll be good to go. Save yourself a lot of headache.
All right. For most people, it's not a problem.
Right, exactly. When you first starting off, it's not a problem. But again, make sure you do register in your state though.
Okay, yeah, I was just about to say. So, what about your own state? Like, still like check for threshold? You should just be paying that no matter what, or is that?
Well, yeah, you should
like
just be paying that no matter what. Yeah, the states where you are, because you're in the, say for example, I'm here in California, right? California has a threshold for outsiders, but for me, if I sell $1, I better collect that sales tax and give it to them. You know what I'm saying? So every state is gonna want theirs from their residents. So make sure you do it in your state.
Right.
And also make sure you charging sales tax too, though, because if you're not charging sales tax, you're eating away at your profit. Because a sales tax is not a tax on you; it's a tax on the consumer, and you're just a third-party collector, right? So it's just me and Rich, right? Rich buys something for me. The state says, okay, well, we charge a 10% sales tax. If it's $100, then Rich owes the state $10. So I'm gonna charge 110, right? Rich is gonna pay it. I'm gonna take my $100, put it in my bank account, and I'm gonna take that $10 and send it to the state. But let's just say I didn't collect it. The state says, well, you still owe us $10. So now that's $10 coming out of my 100. So instead of making $100, I now got 90. So I just reduced my profit for nothing.
Right. And that's why it's important to get your resale license then, so you're not paying taxes twice. So when it comes to getting your resale license, do you need your LLC then, or can you just do it with an EIN? Or
yeah, man, the power of a sole proprietor, man, is the fact that you can do any and everything as if you were, the only thing you really can't do as a sole proprietor is pay yourself on a W-2 and sell stocks. That's, if you think about it, that's outside of that, you can do everything as a sole proprietor as you would any other corporation, any other business. You just can't pay yourself a W-2 wage or sell stocks. But honestly, as a sole proprietor, paying yourself a W-2 wage wouldn't make sense. It's just an additional cost for nothing.
Right.
Because it's going to be the same result.
Right. All right. So one of my final questions before we get into like a quick little fact check game. Should people should people be doing this themselves, or should they hire a CPA?
You know what? Great question, man. And I would say it depends on your level of knowledge and confidence. Because there are people, like I said, I'm at the tax desk and I get in trouble for it because all my peers, they'll be like, man, why do you keep trying to send people to TurboTax? I'm like, because I feel guilty charging somebody for something you can really go do on TurboTax. Like if it's just you and a W-2, why are you paying somebody? You're going to do that for free because it's going to ask you. Software today, technology today has definitely advanced, right? It's going to ask you, well, what's this? What do you have in box one? So if you can look in box one and type in the numbers that you see, you can do it, right? For free, save yourself some money. But if you're not confident in that, or you get nervous, you think you may mess up some numbers, by all means, I would say hire somebody, because like I say, cleanup work costs extra. You know, you could pay, they be like, oh, it's expensive, right? So yeah, it may cost you, for most businesses, maybe let's say you pay somebody $500 to do the return. And you be like, oh, well, that's expensive, I'm gonna go do it myself. Well, now you mess up some and the IRS is after you. So now you got to pay still the 500 plus another, maybe extra couple of $100 for somebody to go represent you in the IRS court of law. So I would say if you're not confident, then by all means, hire a professional. If not, at least consult with one.
Mm-hmm.
You know what I'm saying? By all means, at least consult with a professional. Maybe you don't pay them to do the tax return, but pay them maybe like $100. Like, let me just make sure I understand my situation. Let me make sure I got everything I need to move forward. And once they get information, and then you feel more confident, then go for it.
Yeah, I have zero confidence. My CPA last year was not doing so well. I might get a switch over to Tyrone.
hey, man, it's cool. We can make it happen.
All right, so I got, you already started answering someone. You was talking about the G-Wagon, but I got some influencer tax guy myths for you, because I know you like that. So we're gonna fact check.
Love
so
it.
like
Let's
the
do it.
first one is hiring your children.
Oh, so it is fact. You can hire your children, right? You can hire your children at any age to work for your company. But the thing of it is, you actually have to hire your children. You just can't say, oh, I hired my children, I'm gonna pay them up to the standard deduction in your mind, and there's no paper trail, and then just write everything off. It's not gonna work like that. So if you have children, right, especially, man, like with people in the t-shirt game, it's so easy to hire your children. You can have them, do the heat press. You can have them fold. You can have them, lady. So many things you can have your kids do. Just make sure you actually have the paper trail to support the fact that you hired your children. Because one, the reason people want to hire their children is because they want to be able to, one, write off the amount that they pay them, right? Two, they want to be able to take the income that their children earned, per se, and put that into a Roth IRA so they can start building wealth for their children tax-free. Beautiful strategy, right? I say absolutely do it. But think about it. If you putting, well, let me say, not you think about it, but here's the deal. If you hire your children in your mind and you take money and you put it into this Roth IRA in your child's name, and there's no paper trail, there's no actual earned income, well, there's a penalty of 6% of the income you deposited per year until you remove that money from that account, right? So it's like, what's the point of putting money in there if you're trying to establish wealth and build wealth when you're getting penalized on it because you didn't do it properly in the first place? Plus, you don't want to make you don't want to get in trouble with the Department of Labor, because the Department of Labor has strict rules around hiring your children, right? There's, especially if they're in school, right? You got to make there certain hours they have to, they cannot work, they can work. There's so many hours they can work. So it's kind of like, if you don't have that paper trail, yeah, no.
Just don't do it.
but
actually
again,
working.
yeah. But again, know that you can. You
Yeah.
just have to do it properly. Because
Okay.
if it's not done properly, meaning that you really have to get a payroll company involved, because you really have to put them on payroll. You have to submit payroll to both the federal and state agencies, right? Like, you have to fill out the actual forms to do so. You have to issue them a W-2 at the end of the year. Everything has to be there. And if you're not doing that, you're doing it wrong. And I've heard people say, oh, I'm hiring my child as an independent contractor. Think about that. Let's really think about that. If you hire an 8-year-old, is he really independent? Is he really conscious? Does he really have a business? Like, you really setting yourself up for that. Like, and there's laws really getting to that, because a lot of people find it easy to do 1099 because there's no paperwork. I'm gonna just, at the end of the year, issue a 1099. I ain't got to do none of this extra. they cracking down on that. So please do not pay your child independent contractor and then think you about to go do all these things with it. It's just not gonna work.
Then they gotta file income tax.
Yeah, yeah. But I think you're
Yeah, it
absolutely
don't make
right.
sense.
It don't make sense. If your goal is to try to save money for them, because think about it, if you pay your 8-year-old up to the standard deduction, right? Because the standard deduction is what we limit it as. Because if you're under the standard deduction, which for this year, well, for 2022, the standard deduction is 12,950. So if you pay your child $12,950, they don't pay taxes because the standard deduction will zero out their taxable income, right? No taxes paid. You get to write off 12,950. They can put 6,000 of that into the Roth IRA because that's the max you can contribute, right? The other 6,000 they can keep and go buy whatever they was gonna buy, the Jordans, the Xbox, the PlayStation, because you was gonna buy it anyway, right? But now
Right.
you just converted that into income and you wrote that off, so it's a win-win on that instance. But
Mhm.
imagine doing that as an independent contractor.
Yeah.
12,950 as an independent contractor, you giving your child a 1099. They have to file that. Now
Mm.
they're subject to the self-employment tax of 15.3% of that. And who gonna pay? The parent. So why did you do it in the first place?
Yeah, don't make no sense, man.
It
So
don't.
so
It
just
don't.
don't do it unless you're gonna do it right.
Exactly.
Alright,
Exactly.
I got one more for you because
Talk
it's
to
so
me.
popular. I think it's like over I don't know how much the weight is, but I keep seeing it. It was like, "Go buy a G-Wagon so you can ride it off." What's up with that?
Woo, man. It how can I say this? Like since the history of time, mankind has been attracted to shiny objects. You feel me? Like if it shines and it glitters and it's gold, we want it. And so people take advantage of the idea that I could go get some shiny and benefit from it. The G Wagon. Oh man, I hate this thing. So the play is this. You go buy this G Wagon, and last time I looked, G Wagons at the low end 200,000, the high end maybe 370, right? So you can go buy this car, and as long as it weighs over 6,000 pounds, you get to qualify for what's called the Section 179 depreciation. And Section 179, IRS gets lazy because it's named after Section 179 of the IRS code. And it simply says, if the vehicle weighs over a certain amount, you can write the whole thing off in the first year.
Mm,
Right. So the play is this, or that's what they call it. I'm gonna give you this play. You go buy the G Wagon. And granted, you ain't about to put 290,000 for the car. You're gonna probably put 10,000 down. Cool. But now you got this big write-off of 200 some $1,000, which is beautiful. I admit that it's beautiful, but here's the thing. What about next year? Because if you're a true business owner, if you really trying to get your business off the ground, if you're really trying to have your business support your lifestyle financially, it's not a 1-year thing, right? So if you get the G Wagon, you write it all off in that first year. What about next year when you make money? You ain't had nothing to write off. What you gonna do? Go buy another G Wagon? You ain't gonna do that, right? Like, what's the point? You know what I'm saying? Like, well, what about the year after that? So you're not gonna have nothing. So to me, it don't make sense. It sound good because I get to
right.
go buy a car and write it all off. But then also, let's think about this. If somebody was to go buy the G Wagon, let's assume they make a lot of money, right? The G Wagon, let's just say for purposes, let's get 290,000. Their taxable income, 290,000. So they're gonna buy a G Wagon so they can zero that out, right? Because that's the goal. I don't want to pay no taxes. So for me to pay no taxes, the double benefit is I get to go get the car I want and write it off and pay zero taxes. At 290,000, when I ran the numbers, it was either 200 or 290 or somewhere over there. The tax was $50,000. So at 290, the
Mm,
tax that was over was 50,000. And I'm like, let's pause right there. You want to go spend Because even if you don't spend it, the 200,000 in that year, you put 5,000 down, you still obligated to pay that. It's not just gonna go away. So even
Right.
within a 5-year span, you still gonna end up paying more than that because taxes and interest. So you really just spent $250,000 to get rid of 50.
Yeah.
What sense does that make?
It don't make no sense, bro.
It don't. But it sound good though. You
Yeah, it
feel me?
sounds
Like people be
good.
like, yeah, it sound, oh man, I get to go get this, and then yeah, the IRS is paying for it. No, they not. And I hate when people say the IRS is pay for it. No, when
Hey,
the
you gonna
IRS
pay
get gonna
for
give
it.
you a check, yeah, you paying for it. The IRS just said, all right, well, we ain't gonna tax $50. We not gonna tax 50,000. So you spent 200 some $1,000 to save 50.
Mm.
That don't make sense. And even as a business owner, that shouldn't make sense.
Nah, it don't make no sense. It sounds like the only trick is to start a YouTube channel. Yeah. All
I
right,
mean,
man. Go ahead.
no, I will say now, I will say this, just to be honest and to be fair. If you are not necessarily trying to be a business owner, and you strictly want to just do a quick hustle, right? Just to fund that trip to Dubai, fund that trip to Jamaica, Thailand, or something, and
Mhm.
you just doing the quick hustle and you happen to make a lot of money, right? You're like, oh man, yeah, I made a lot of money this year. I need something to write off.
Right.
But if you know you're gonna do it that one time and you ain't gonna do it again,
Yeah, that makes sense.
yeah, then by all means, trick it off if you got it. You know what I'm saying? But if you really trying to play this long game, if you trying to win in this as an entrepreneur,
Yeah.
man, you got to make better decisions.
Yeah, but see, like the one that you just mentioned, those benefits make sense if you in it for the long term, anyways, because then you'll have that extra money to actually do it the right way. You
Yeah,
have the funds
yeah,
to do those things instead of like trying to go get a G wagon financed and like pay
right.
that amount of dollars. So yeah,
Yeah,
that
yeah,
makes
not at all.
absolute sense. All right,
Not at
so man, that was 30 minutes solid, bro. I was tuned in, man. I was learning so much, man. Y'all gotta
all.
follow my guy Tyrone. Let them know where they can follow you at.
Yeah, well, on YouTube, they can find me at the Self-Employed Tax Guy. That's where I really drop all the long form, all the free, try to give people as much game to help them make, some informative decisions. That's there. On social media, on Instagram, also at the Self-Employed Tax Guy. I'm new to TikTok. You'll see me there, but if we being honest, whatever we post on Instagram, we post it on TikTok anyway. So, it just choose whichever platform you're on. We go from there.
All right, so that's self-employed task guy. Make sure y'all follow him. Y'all not gonna get those crazy loophole tricks, but you're gonna get the truth, and that's what's really gonna help you. So,
Absolutely, absolutely.
appreciate y'all watching. Comment, like, subscribe. We're gonna see y'all next time.
Yes, sir.